All right, welcome. Thank you everyone so much for joining us tonight. I'm sure you all have a Zoom webinar fatigue right about now. So we really appreciate that you're here, and hopefully we're going to make it worth your while. Because we all know that there are plenty more important things that you have to go get done. So again, we really appreciate you allowing us to take over your prime time. I haven't watched either of these shows yet, so pretty pumped up for them. Okay, so let's get right into it. I'm going to start things off by giving a bit of context, sort of on where we may stand with regards to the investment strategy for 2-unit conversions. I'm sure a lot of you have or intend to still use this strategy in conjunction with the BRRRR method, which is to buy, renovate, rent, refinance, and repeat with second suite conversions. And today, Kevin's going to go over that from a financing standpoint. After my quick spiel, Tammy DiTommaso, realtor from Rockstar Brokerage and iWin, is going to give us some market data and what she's seeing out there. Then we're going to have Kevin, as I mentioned earlier, from Empire Mortgage Group, introduce himself, discuss a bit about financing using the BRRRR strategy, and what the environment is like from a lending perspective. After that, Manny will discuss the situation with renovations and provincial closures, and how that's affecting investment properties, and share some of his strategies as well. And finally, last but certainly not least, we will have Cherry Chan from Real Estate Tax Tips, who will be providing a ton of very valuable information and support on what's available for business owners, and share some incredibly valuable information with regards to tax implications for second suites. Hold on one second. I'm just going to do the mute again. There we go. And then I'm going to wrap things up by briefly discussing some new opportunities coming up in the months and years ahead with third unit investment options, okay? Before we get started, a couple of things. Each speaker will go for about 10 to 15 minutes, then we'll have a short Q&A, and then go on to the next speaker. At the very end, we will have all speakers available for follow-up questions, and if we can't answer them all, we will have email available for follow-up. We have 2 hours scheduled tonight, but if need be, I'll stick around for longer. Due to the number of participants this evening, we will keep everyone on mute, and if you can type in your questions in the chat box, that would be great. And one last thing I mentioned earlier, I've heard that Zoom has been acting kind of weird, so if for whatever reason we get booted off, give me 5 minutes. I'm going to set up a new link. I'll email that out to everybody to log back in just in case, all right? Okay, so a quick intro for those who don't aren't familiar with me. I'm Andy Tran of Suite Editions. I primarily work with homeowners and investors who wish to convert their homes to contain legal second suites. Some know me as just the basement guy. I'm cool with that. Okay, so what does the future hold for 2-unit conversions and real estate in general, right? That's the sort of the number one question on everyone's mind. So before we get into this, it's important to know that I'm not a market expert. I'm definitely not an economist. So the short answer to this question is really, I don't know. And I have a feeling that most people don't as well, okay? But what I will do is give you my opinion, which of course can be wrong, and tell you what I intend to do based on my own research. And I encourage you all to do as much research as you can, and make your own judgments on what to do, not to rely entirely on one source of information, or a lot of information, even from us today, our expert panel. Okay, so now that we got that out of the way, let's dive in. Okay, so we know that the future is unknown. There's so much that's up in the air right now, and things are constantly changing. One thing is certain, the economy is unquestionably rattled, okay? So really, in the best case scenario, things normalize soon. We go back to regular lives. However, the fact is that we have 13% unemployment. Okay, that's the official number. A lot of analysts say that it's actually higher. Millions of people who've lost their jobs, that will not be rehired. A lot of businesses will tread very cautiously for the foreseeable future. So, that's sort of the best case scenario. And, if the virus sticks around, perhaps with, different waves and we can't get back to normal for an extended period of time, that's kind of the worst case. So in either case, I think it may be safe to say that, we won't go back to the exact normal that we're used to just several months ago. So here's a slide showing the unemployment rate in Canada. This is through tradingeconomics.com. They got it from Statistics Canada. So officially it's 13%. You can see up till early 2019, it was 5.4, and it hasn't been at 13% for a very long time. Okay, so again, that's the official number. Here's a slide showing the unemployment claims in the US. So the reason why, we're showing US data is because they are the largest economy. We're right next door to them. Canada, as an export-based economy, we're highly affected by their situation. So I think it's important to look at their data. Okay, so you can see at the end of May 2nd, there were 3.2 million more jobless claims. So total 33 million. I mean, that's 10% of their population on top of the previous, I guess, 6% unemployment. And again, those are official numbers, right? So there's a lot that is kind of unknown. Now, this is not mean to really scare you guys. I'm going to get to sort of the bright side later on, but just to kind of show you some interesting data. So here's a very interesting chart that I took a screenshot of from Peak Prosperity. It's a very good YouTube channel that I follow. If you gauge the health of the economy based on the stock market, I think, you'll think that the economy is doing amazing. Okay. Obviously, with at least 33 million people in the US that's unemployed, that's certainly not the case. In this chart, you'll see the US Federal Reserve buying $2.5 trillion in assets starting in early April. And you can see the stock market pretty much moving in lockstep with the increase in the Federal Reserve balance sheet. So the red line shows the asset purchases, while the blue line shows the price to earnings ratio of the S&P 500. Okay, so it's pretty much safe to say that the stock market is a little bit decoupled from the real economy right now. Doesn't seem to make sense that these markets are going up, when you have, potentially 16% or more unemployment. Back in Canada, this type of central bank intervention is happening here as well, with the Bank of Canada getting involved in quantitative easing, asset purchases, not to mention near zero interest rates. On the government side, we have over 100 billion in fiscal stimulus and likely more spending and deficits in the coming months. Okay, so what does this all mean? Okay, so you might think that with all this government and central bank money being pumped into the system, we'd be at the risk of inflation. In the short term, probably not much is going to happen since our economy is basically at a standstill. There might even be risk of deflation in the short term. Given this data, I think, my own personal opinion, I think it's hard to make the case that real estate prices are going to continue to go up in any significant manner in the short term. Okay, again, that's totally only my opinion. So now let's go back sort of to the fundamentals. We really still have a housing shortage here in the Greater Toronto Area. We have limitations on where we can build. There's an extreme limitations on different housing options. Okay, so here's a map of the green belt. I'm sure you're all familiar with it, where we can't do any sort of construction and development. More importantly, though, most of these cities, in Southern Ontario and Canada, are fiscally insolvent when you sort of extrapolate into the long term, and therefore they're still relying on intensification housing to generate revenue. Even though the pandemic has temporarily shut down borders, Canada is still processing immigration applications. So our population in Ontario will still be expected to grow in the coming years. Here's an interesting article from Forbes. I just saw this last night, which highlights the fact that the US is actually closing its borders to foreign students, while Canada is still accepting them. Okay, and we will likely get a lot of overflow from students who were originally going to go to the US. Okay, so for those of you who have student rentals, this is good news. So in conclusion, I think it likely at some point, whether that's months from now or years from now, all that stimulus will make its way back to the economy, possibly in the form of very high inflation. This could result in higher prices in real estate, similar to what we've seen in the past 10 years. as stimulus was pumped into the system after the financial crisis of 2008. Also, not all real estate is created the same. If there's financial hardship in the coming years, I would imagine that modest starter homes with income potential will be more resilient than, say, large homes. Some people call them McMansions or luxury condos. Over in Calgary and Alberta, we see that in a down economy, things like large houses, luxury condos get hit first. Meanwhile, kind of more modest starter homes are still in strong demand. So this is the reason why I personally choose to focus on this type of real estate as a hedge against financial downturn. And this is the decision that I made, over 10 years ago after the financial crisis, is to sort of look at things that are more resilient to economic downturns. Now, since most of us here are investors that are in it for the long term, now may be the time for us to prepare, do the work, and maybe even scoop up some good opportunities. Okay. At the end of this discussion, I'll share some exciting opportunities as it relates to third units. Okay, so that completes my little spiel there. I will pass things over to Tammy. Tammy is a good friend, is a very highly sought after realtor for 2-unit conversions in the Hamilton and Niagara region. She and I have worked with dozens of clients to find the ideal second suite conversion project. And going forward, we'll be working together on 3-unit conversion projects as well. She's going to give you an update on the market conditions right now. So, Tammy, are you able to unmute yourself, or do I got it?
Yep. No, I'm good.
Awesome.
I did.
All right, take it away.
Great. Thanks. Hi, everyone. Thanks so much for joining and another Zoom call like Andy had mentioned. And Andy, thank you for having me, inviting me as well. I'm honored to be here with you guys. So I guess a little bit about myself. I've been working as a realtor for a few years now, and investing as well. And I guess second suite conversions became my niche, so to speak. Something I just started to I just dived right into it. And actually, I kind of leached onto Andy and try to get as much information out of him as much as I possibly could. So I was pretty excited about learning and going, just even trips down to City Hall, everything with him to learn as much as possible. So I guess I definitely really enjoyed that aspect of it. I mostly work as a realtor in Hamilton. We'll do some of the surrounding areas as well, but I would say Hamilton is where I'm most known and I know well. I grew up and raised in Hamilton as well. So another little bit about myself, my husband and I own a gym here in Hamilton, and we have 2 little monkeys, not actual monkeys, but 2 kids that are monkeys to me. And yeah, kind of trying to find the positives and enjoy this time during COVID, at the same time trying not to kill my husband. Joking, not joking, but yeah, and then just trying to get through homework and be with the kids though as much as possible. So again, thanks again for having me. As far as the market goes, so let's get into that. How's the real estate market these days? Definitely different. Andy, you can go to the next slide there. So this is a picture here of my car with my wipes, my Lysol wipes, my gloves, my masks, my hand sanitizer. This is what we're looking at nowadays with going to homes during COVID. So it's not business as usual right now. We don't have any open houses. We're not allowed. There's a lot of showings virtually, and a lot of videos being put up on the listings so that people can see the houses, or I've even seen some other people doing virtual tours and then presenting them all maybe on a Zoom call and so on. We are seeing a lot of COVID forms that we have to fill out, safety precautions for everyone, asking us if we have any symptoms or if we've been out of the country. And in some cases, it's a matter of making sure that we're doing our due diligence with our clients, but at the same time, some of them are actually asking us to fill out the paperwork. It's, I know it's for safety and I get all that, but it does make it a little bit difficult. If I'm out on the road before and a listing would pop up, I like to try and see properties as soon as possible. And let's say it's vacant and I thought, oh, you know what, I'm close by, I'm going to go ahead, I'm going to take a look and see that house. I'll go ahead and book it, and I have to fill these forms first. And I don't have my signing app on my phone. I never really needed to before. Might be something I might need to do, because I end up being in a bit of a pickle there, because I have to sign off this paper first before I'm allowed to go into the house. And as far as safety goes as well, we're seeing, obviously, I guess I mentioned their masks, gloves, sanitizer. I've also recently been asked, when I went to go see a house, to wear glasses as well. I thought, okay, I haven't been asked that one before, and couldn't find my dad's safety goggles. Didn't know if I was going to need to wear my son's water goggles or not, but I ended up wearing a pair of glasses that I bought the frames, but I hadn't had the prescription filled, so there was writing all over the lenses still. So I ended up wearing those. But, whatever it takes, and if that's what's required, then so be it, right?
Snorkel set.
You know what? We kind of joked about wearing the snorkel set, but I didn't want to be disrespectful, because I do know that this COVID can be very serious for some people. So, but anyway, yes, so I ended up wearing those glasses.
Next slide.
And then actually, I was just going to say, as far as the market goes with these safety precautions, one thing I am noticing is that during, I'd say, March, when this all was really coming to a head and coming out, it was definitely slower. We had a lot of sellers not wanting to sell, and that's still the case with some people, but not wanting to sell because there was this unknown that was out there, that this was happening. People weren't really sure. Caution strict as they are now. So we didn't have all the forms that people were filling out. We didn't have the options to go ahead and sorry, I just lost my train of thought because I saw the slide change. Yeah, we need to be able to go into the house and feel comfortable. And at first in March, we weren't really noticing that comfort level was there. And then I think that, I don't know if people became a little more accustomed to it, but then at the same time, we are taking these precautions. So I'm noticing a little bit more flexibility with that. And I think that's why I'm noticing that even April is becoming a busier month than also March was, right? Some of that unknown, and starting to move with it and learn with it, right? So when we talk about what the market is like right now, it's still definitely a seller's market. I mean, one of the biggest issues we are having is inventory. It's still slower. It's not our usual spring market by any means. Like I've written on the slide here, in a nutshell, the sales are down, but the prices are holding strong. So one thing I always want people to be aware of, and make sure that you're talking to your realtor or doing your due diligence, isn't just looking at a news article and reading the top headline, which can be very doom and gloom, and then just calling it a day. I mean, really look into the numbers. So if you want to go to the next slide, that'll give you a little bit of an idea here. So I'm with RAB. RAB is the Hamilton Burlington board. I was Niagara as well. And they're TREB. So if you ever hear those terms thrown out there, TREB is the Toronto board. This one here for RAB, the Hamilton Burlington board in April. If you're looking at the numbers here, I mean, yes, it's definitely accurate. Sales activity are down. So if you're looking at 2019 numbers, 816 sales, and this year, 2020, we're looking at 337. The interesting thing, if you hit the slide button there, a little arrow pop up. Oh, it didn't pop up. Okay, go back one. Sorry. Yeah. I'm not sure why. So I have a few down there. You can see the average price, and you can see that the average price is still up. So, I mean, anybody who has bought an investment property, if they're wondering, is the value of their property, have it's gone down at all? It's not. It's clearly it's still strong, possibly gone up, as you can see some of the numbers there. So I feel definitely happy about that. A lot of the investors that when we're purchasing, I mean, we're purchasing for buy and hold and for a long period of time, which is nice. So even though maybe some numbers can fluctuate throughout, we can still see that they're strong right now. And this is for April. Okay, so we can hit the next slide. Just trying to get through these in a timely manner for you guys. Sorry that print's a little bit small. This is just a bit of a breakdown that shows the April numbers. So the number of sales and the average sale price. So it's again 2019 and 2020. So comparing the 2 years. Hamilton West is the very first one it says up there, where again, 2019 it has 80 and 2020 it had 18 number of sales. If you continue and you look at that list and you're looking at the prices, for the most part, all of our average sale prices are actually still higher. So we are still holding strong and moving upward. There's a couple that have brought the numbers down, and those go back to a little bit of what Andy was saying. Maybe some of the houses in, I believe it's, where is it here, watered down. Some of the houses that were more expensive, bigger homes, higher price points, those are the ones where their sales were down more so for the average sale price than the other areas. And then as a whole, that would obviously maybe can bring them down a little bit as well. So that's what I mean by checking and watching your newspaper articles and digging into that a little bit deeper just to make sure, and look into your area of where you're looking to purchase, right? You can go to the next one there. This here slide, I just wanted to show you a little bit that it's actually an average from 2010 to now, 2020. And it just shows you that, you know, if you're buying and holding for a long term, we're talking about these second suites, buy investment properties and holding on to them for the long term. Even if we do have dips that go down, and you can see it there in the graph, they go back up. And right now, if you look at that, we are just above what we were doing in 2017. And if anyone remembers 2017, it went pretty good. So you can see how it spiked up there and then came back down. But now we've averaged back to around those numbers. Okay. You can go back to the next slide. So this here is my big question that I get. So it's one thing, you know, when I'll be talking to my clients about this, and I've got, you know, a relationship that we've started and we've had multiple conversations. And the other day, someone had asked me, we do offer some online Zoom classes. We've been doing them virtually lately with the second suite conversions and with some street smart tours and so on. And someone had asked the question, you know, should I buy now or should I wait? And I kind of hesitated because I felt like, in short, the answer is now to me, right? But at the same time, I never want anyone to feel like I'm trying to be an agent. I'm trying to make a sale. The way that I look at it is that we're buying these properties and we're holding on to them for a long time. I'm not telling anyone to overspend by any means, but as opposed to now, or let's say even a couple months from now, what we're seeing right now with numbers, that they're not really dipping, they're not going down. So will they go down? I don't know. Will they go down a lot? I guess not, but you know, I guess I don't have a crystal ball. But I do imagine that they're going to stay strong is what I'm thinking. And as far as waiting it out, then you're going to be joining all the other people that have waited it out. So I definitely, and I don't want to be disrespectful to anybody else who's deciding, you know, I definitely want to wait, and so be it. I mean, this is, you know, different circumstances with COVID. There's health risks and so on, and some people with some uncertainties and not really sure of things, and they want to wait. But if you're going to ask me straight up, what's my answer and what am I thinking? Then yeah, I mean, right now with us having lower inventory, it does make it a little tougher, but at the same time, we have a lot of people that are also scared to be out there and purchase. So we're noticing that there's typically a lot less competition. And for that reason, I think it's a good time to purchase, because you're not going to be competing against as many people as we normally would have seen in a spring market. And that's it for me.
All right.
I know, I think we're going to be doing some questions and stuff too, right, later. But.
Yeah. Thanks, Tammy. Yeah, if anybody has any questions, type it in the chat box. If we can't get through all of them as we're going through, we will stick around till the end, try to answer them. There was one here. I mean, this is something that you can answer if you like or not. So what's your market prediction for the next 6 months? Given what
somebody's going to ask me on a date.
This is a very local kind of market question, because, you know, obviously macroeconomics wise, it's hard to say, and you know, nobody can kind of predict that, right? But just, you know, very local, you know, you're looking at a lot of properties in Hamilton, Niagara region, and Brantford and those kind of things. Like, what's your feeling, you know, in the 6 months from a just regular cycle kind of thing?
6 months from now?
Yeah, or in the next 6 months, like, what do you see?
The next 6 months? So what does that bring us to? Fall, winter? I'd have to actually
Yeah,
do, hold on, June, July,
late
August,
fall, I think.
September. We might be, you know what, we might be similar. The I'm hoping, I think that they should be a little bit less. Typically during the fall months into the winter months, we do see that the prices of houses go down a little bit. That being said, you know, the prices that we were seeing last November, properties were selling for, let's say, around 485. Right now in the spring, where typically they would be going up higher, we are still seeing them, I think, floating around that. When I'm comparing two properties that I'm thinking my clients are looking at to do a duplex conversion, I'm still in and around that same price point. So we'll see what happens in the next couple of months, but if everything starts to even out or go back to how it was, then I think it might float still in around there or move up a little bit, of course, because as we see the market growing.
Right. Okay. How do you, what's the inventory you feel for investors that are specifically looking for a 2-unit conversion? Is that still tough as pre-lockdown?
Yes, it is.
Still very tough?
It is. It's still tough because I have a search criteria that I have for my clients myself. I actually have my price range going up pretty high just in case there's any turnkey properties. And I could tell you that there's probably at this moment, I'd have to, double check it again. But the last I checked, there was 2 properties listed under 500,000, like 499. And those are bungalows because we like to convert those the most. But at the same time, I mean, there is some other things that we could look into. I know Andy and you and I have talked a little bit more about possibly converting 1.5-story homes and 2-story homes. So I think I want to start looking into those options a little bit more as well. I think this happened last time is when we were looking at doing these conversions because they've only really been happening for the last so many years, right, where they've become more popular. And then we were finding that we were having low inventory, mainly to do because of the parking rules, to do a conversion, be able to park, have enough space to park in the front of the house and still meet all the bylaws. So we actually started looking at doing parking in the back as another option.
Right.
So every time we kind of hit these little bumps, we try to expand and think, okay, what can be the next thing we do? And then again, like you're mentioning, third suites, right?
Yeah, that's a great point.
It's a little bit tough, but we're still looking.
Yeah, that's a great point. And as market conditions change, we also always have to come up with creative options. Like you mentioned, the 1.5-story Cape Cod houses. I worked on one with Manny where we had to carve out a piece of the main floor in order to comply with the bylaw requirements for the size. 2-unit houses, sometimes you might have to do a sort of a little bit of a vertical split on the main floor. So there's always ways. Townhouses is one of the things that we're getting some requests on as well. So there's always opportunities. You just sort of have to be creative. Once all the inventory of the existing sort of low-hanging fruit gets taken, gets done in that particular market, we sort of have to look at what's next, right? So definitely, evolving and kind of changing strategy is very important.
Yeah, and that 1.5-story that you just mentioned, I can tell you too, that's kind of like Z-split a little bit, right? Where you have some on the main floor upstairs and then you come through the back and you have the main and you go down. Our client, that investor that had purchased that, rented it out full rents as well. So some people, there was a little bit of a difference with the levels being split, and some people absolutely loved it. So definitely more options out there that can obviously work well.
Are you seeing sellers holding offers, multiple offers, like just in general? It doesn't have to be necessarily conversion types of properties.
Yes. Yeah, we still are. It's definitely not. I don't notice it as, I'm not seeing it as much as we have in the past, but I definitely still am seeing it. I had someone who messaged me yesterday. We were talking about offering a property, and they're holding offers tomorrow. And but for the most part, it's not as popular right now. And the people are open. Sellers are open to receiving offers conditional on them still being able to see the house. We're seeing more of that, which we didn't see before. So we're putting in offers without even seeing it.
Okay. One other question, and I'm not sure if this is sort of within your scope, but for tenant viewings for landlords, is it sort of the same precautions as if you're just showing the property for rentals? I mean, for purchase?
Definitely, and we're definitely doing virtual showings, and everyone's, they're doing things a little bit differently. Some are still doing the virtual showings, and then they're going ahead and filling out the application, doing their credit check and so on, moving forward. I know some people who have gone ahead and said, if you want to move forward and do a credit check first, get that, you've already seen pictures of the place, do the credit check, and then if we're ready to move ahead, then we'll go ahead and take you out to the unit. We'll wear our gloves, we'll wear our masks, and then actually have you be able to physically see the unit, of course, before you sign the lease agreement. But we're definitely seeing a lot of that. And actually, one of my recent investors had put their property up for to find some tenants, and they actually hired a videographer come in and had a professional, just like they would if they were selling the house, and had someone come in and show it that way. And they filled up their unit in 2 weeks.
Right. Okay.
800. They're receiving 1,800 plus utilities for their upper unit.
That's amazing. Okay. Well, thank you so much, Tammy. Really, really good information, and it's good to get that sort of market update. Are you able to stick around till the end?
Oh, absolutely.
Yeah, awesome. Okay, so we're going to move on now. Before I do that, I'm just going to quickly answer one question here. Have we ever done any conversions on side splits on semis? Yeah, actually, we've done side splits, back splits, back split semis. Other than no real issues, it's a little bit more complicated in terms of the fire separation, but split level homes, whether back split or side splits, they actually work very well for 2 units, because you have a big portion of the lower unit as above grade. So my house here in Scarborough is actually a back split, and I converted it as a legal 2 unit, and we have sort of the first level of the lower unit facing the backyard. So it's actually really nice. So I do recommend those. Condo townhomes, I'm not really sure. There may be specific rules and bylaws around condos that I'm not sure about. So I've never done any conversions on condo townhomes. Okay, so yeah, let's move on. So now we're going to bring up Kevin from Empire Mortgage Group. Kevin's a friend. He's a go-to guy for many real estate investors who are doing multi-unit conversion projects. He's been very helpful in our infill development projects as well, with myself, my partners, Charles and Steve. He definitely has an outside-of-the-box approach to get investors the funds that they need to finance their project. So Kevin is going to give us a great overview of financing using the BRRRR method, which a lot of you guys are familiar with, I'm sure. Okay, so take it away, Kevin.
Thanks, Andy. Thanks for having me here today. Looks like there's an amazing crowd. So I'm here to get you guys money. So if you guys need money, call me. If you don't, then just go ahead and just go grab a snack and just come back for the next portion. So, but we're here. We are trying to find different ways and think outside the box when it comes to creative financing, right? So a little bit about myself. I own and operate a brokerage called Empire Mortgage Group. We are based out of Hamilton, Ontario, but we service all over Canada. So if you want to invest in Toronto, and Ottawa, or Vancouver, please reach out to us and we can definitely help you with that. Myself, personally, I have 10 years of mortgage experience, and our support staff, our amazing support staff, has over 30 years, right? So our goal is to try to make sure that the whole financing process goes through as smoothly as possible. And because of our experience, we can find a resolutions for any obstacles that might arise during your purchase or refinance. We currently, as of today, we have access to 41 different banks and lenders in Canada, right? So what that means is we can get super creative, guys. We have different banks for every type of investment properties, vacation homes, second homes, owner-occupied, purpose use there. So for those who are taking notes, these are a couple of tidbits that we have been utilizing over the past 2 weeks that have just blown everyone out of the water. So if you're taking notes, we're able to use child care benefits as a form of income. So that is up until as long as your child is 15 years or younger, we can use child care benefits as a form of income. We can use cash back. I'll get more into cash back post closing in a little bit. We can use 100% of your legal suite income. So if it's owner occupied, sorry.
But do you want me to skip to the next slide there, Kevin?
No, just hold on there, buddy.
Okay, sure. Yeah, let me know.
Yeah, we'll move along. But yeah, so 100%. So if you're buying a duplex, or if you're buying single family, converting it to a duplex, there are a handful of lenders that will allow 100% of that income to service the deal. So servicing as in refinancing that property, take your capital back out, or using that income to purchase your next property. Just be careful. A lot of lenders use 50% of it, especially if it's owner occupied. So make sure that the lender or bank that you're working with uses 100% of that income. And then another thing that's been very popular for us are guarantors, right? So if you're self-employed, just new to the industry, need the extra bit of income or better credit, a lot of family members are hesitant about the whole co-signing. They don't want the added liability on their credit bureaus or the property on title. So guarantors is an amazing option right now, guys. And what a guarantor is they're simply guaranteeing the deal, right, Andy? So the liability does not show up on the credit bureau, and they're not on title. So just to get you guys over the hump on maybe your first project or your 20th project, guarantors are just an amazing tool that we're using right now. So you can skip to the next one there, Andy. Financing strategies. So we have about 6 or 7 different strategies that make up 90% of our investment portfolio clients, right? But these have been like the 3 more popular ones over the past month. We kind of try to update this monthly. And so purchase plus improvements, amazing product, very underutilized. This capital on top of your mortgage for home improvements. And you can do this for purchase plus improvements or refinance plus improvements. It's a very underutilized tool, and you can do it with as little as 5% down. Right? So so really utilize this, especially those who are looking to buy their first investment property or just first owner occupied properties. Right? So the BRRRR method, this has got to be one of the more popular investment methods going on right now. I'm sure a majority of this room have heard of the BRRRR method. So we'll go into a brief examples for those who have not heard of it. And just in my opinion, it's a great tool to just buy, renovate, rent, refinance, and repeat. And the third option that has been one of our top 3 is cashback financing. So what that is just cash back on closing for home improvements, and they're at great rates. Like times in the past, we've seen cashback financing at higher than market rates, but we're getting amazing rates right now for cashback financing, definitely below 4, even below 3.5%, and the amount of capital we can get up to is up to 3% cashback. So 3% on is a big chunk of money depending on what your purchase price is. So utilize that tool when we're looking at financing options. Move along, Andy, to the next slide, please. So BRRRR method, guys. So this is, like I said, many of you guys are utilizing right now, but those who are not utilizing it, I'll just go through a brief timeline, a brief example, and we can get into more detail. Just call me, guys, and I'll be more happy to run through a more in-depth detail. But it's simply buy, renovate, rent, refinance, repeat. Buying, it's so important to work with a team of amazing real estate professionals like Tammy's team and those who you're familiar with, who can search for distressed and undervalued properties. That is so key to in order to create value, in order to increase the value of property greatly, you got to get an undervalued property, right, guys? So use the experts in your corner to try and locate those properties, right, guys? So renovate, time is money. Ask Manny, right, Manny? It's you want to do it quickly, but obviously safe and attractive to get top dollar on your appraisal. But guys, time delays cost you money. Going over budget obviously costs you money. So make sure you budget accordingly and get the right team of reliable professionals in your corner. Renting. As soon as you're done renovating, get that property rented, right? Cash flow. Start cash flow right away. And what we can help you with our team is that we can help you with credit checks for your potential tenants as well. So please reach out. There's an added service free of charge for you guys. And it's just our way of helping you make this a successful project, right? And then refinancing. This is the most important part, right? This is how you get your money out. This is how you invest in the next project. So refinancing is lenders are tightening up their guidelines, right? So appraisals are tightening up their valuations. So it's so key to have good relationships with lenders like we do, and also great appraisals that know the area, that we can help educate on certain comparables that they can use to make sure that you're getting top dollar for your appraisals, right? And documentation, like I'm guilty myself. I don't like providing documents often when applying for a loan, but it is so important, guys, to give whoever you're using for your mortgage financing a full slate of documents, right? Because it serves as a roadmap to get you from point A, which you are now, to point B, so as much capital as back as possible. And so I think to have your documents prepared and organized just speeds up the process. And lastly, if done properly, you can recoup most, if not all, of your funds back. And then it's just a matter of, looking at the next project, rinse and repeat. Next slide there, Andy, please. Guys, this is a sample analysis. Super, super simple. Like this is just bare bones. Purchase for $400,000, and then we're gonna get appraised with $575,000. You're probably thinking, this is crazy, Kevin. Like, how are we gonna increase the property value by $175,000, especially with a renovation cost of $50,000? Guys, like these are distressed and undervalued properties, right? We're looking at 10-15% under the market value at times, right? You know what I mean? Like these are properties that have been vacant or halfway through construction. These are properties that might sell on the market for $440, $450, $460, right, so guys? These numbers are actually not as far-fetched as you might think. I'm sure I can give Mandy $50,000 and he can increase the property by $100,000 for the right, Mandy. So, but it's $400,000 down payment, 20% down for investment property, renovation costs, total capital $130,000, mortgage loan for $320,000. We get this property appraised $575,000, right? Your new mortgage is $460,000, 80% loan to value. Pay out the mortgage. Your proceeds from refinance is $140,000. Obviously, this is a perfect scenario. This is the perfect storm here, guys, right? So even if you recoup $100,000, $115,000, right? Like it just gives you a great stepping stone on a property that's going to cash flow. So in this example, I'm basing the mortgage of a payment of $1,982 per month on this, and you have 2 units in this property. It's at $1,500 a unit, and estimated property tax at $300 a month. You're cash flowing over $700 a month, right, guys? So, and you're recouping all your capital. So you have a cash flowing property, and you're pulling out all your capital for your next project, right, guys? So yeah, like we can run scenarios, and this works with any renovation costs, any purchase prices. Like just make sure you're doing your homework when it comes to budgeting. Next one, Andy, please. Yeah, so just kind of wrap it up is guys, like there is a plethora of scenarios and strategies that we can use, right? And a lot of time it's very client dependent and it's very property dependent, and how much capital you have access to, right? So feel free to reach out to us. And take pictures of your projects once you're done. Like this is actually my kitchen here, and use it as your portfolio, as part of your portfolio for future projects. If you're bringing on joint venture partners, it's nice to have a nice portfolio. But for us here, we're like I said, we service all over Canada. We specialize in first-time home buyers, owner-occupied investment properties, and we have a new site coming soon with a lot of unique calculators and that you can take advantage of. But yeah, like this is just the tip of the iceberg, guys. But yeah, like we have a lot more stuff coming out. If you guys register for Andy's course, what I'm going to do is I'm going to tell you guys what our best interest rate is, how to go in to an offer firm with no financing offer, and how to buy an investment property with 5% down. How about that, Andy?
I like it.
Yeah, so
I want to hear about that.
Yeah. So
how come you haven't told me about those ones?
No, it's coming.
Hey, that was a nice kitchen.
Thanks,
Really
man.
nice.
Yeah.
It's amazing how I was okay with that kitchen there originally. Maybe do a quick
Just quick
cosmetic
paint
fix,
job, new counters, maybe. You know what I mean?
yeah.
Like
But then when
what,
you
what
see
the,
that one on the right, that's a day and night. Amazing work. Good job. All right. So there's Kevin's contact, and yeah, thanks so much for that information, Kevin. I think that was a lot. Some of it is primer information, but a lot of people do need to know that foundation. Like those three methods that you mentioned are instrumental for investors. So
yeah, it's
going
very
over
high
that.
level stuff, Andy,
Yeah.
and I think that I think there's a lot of tidbits there, and even with this whole presentation, right?
Mhm.
If these individuals can walk away with one or two tidbits that can help make the next investment property a successful one, I think we've done our job, right?
Okay, great. So I'm going to there's a few questions here, but first thing I want to ask is if you can give me three things that are different in the lending world between now and say just 3 months ago, just three things that are different now. Like
Income confirmation. It's been like our biggest headache, right? So we in prior years, even in January, February this year, we were able to get away with T4s and pay stubs in certain instances. Now it's a lot of employments. They're doing income confirmation, like a verbal check on your income at the point of application, and they'll do another one before closing to make sure that you're still employed.
Mhm.
So that's been a huge hurdle for us, right? So and like it's just we had clients that bought pre-COVID-19 lockdown, right? Quarantine. So so those clients who get laid off, we had to come up with unique strategies to make sure that their homes closed, right, Andy? So I think that's been like the biggest hurdle.
Yeah.
The second one is the affordability of like those clients too, right? So like we had a lot of buyers just sitting on the sidelines for the longest time due to lack of inventory, but then and then COVID hit. Either they were laid off or they lost their jobs and are not able to purchase anymore. So that's why we started diving in with our lenders, our lending partners, and trying to get different strategies in place, like the child care benefits and like income rental and the guarantors and stuff like that, right? So different ways to get them into a property still.
Mm-hmm.
I think that's meaning and appraisal value has been a tricky one, right? So with COVID-19 and social distancing guidelines, appraisals are not going inside properties. So there's pros and cons to that, right, Andy? The con is that like the owner of the property is doing more work. So we've seen where the homeowner has to take interior pictures of the property and help the appraiser out. So pretty much doing half the work of the appraisal, right? I personally like it because I can show certain angles of the house that I want them to see, and then you get to list everything that you've done to the property, right? So you know what I mean? Like most appraisers are very good at seeing like the renovative project, the upgrades in plumbing, electric, et cetera. But like now you can put a detailed list in what was there before and what you've done since. So I think that's been helpful. Mm-hmm. But what we do too is we try to see comparables and have the story for the appraiser off the bat. Not to like persuade their valuation in any way, but just to help them, right? Just to push them along. Like this is what our clients did. These are the comparables that we're using to get the value that we want to get out of this, mm-hmm. and that's how we're able to kind of adapt with the new appraisal landscape.
Great. Okay. So income verification, affordability, and then the sort of challenges with the appraisal were the three big things, right?
Correct.
Okay, great. Thank you. One question that's on a lot of people's mind, and it's on my mind, is sort of we hear about HELOCs getting affected. Any risk of people not being able to access their HELOCs for down payments for investment properties?
Yeah, no, great question. Yeah, and there are rumblings that HELOCs might be getting, either the amounts getting reduced or even just cut out totally, especially as a down payment vehicle for investment properties. We have not seen that yet, Andy. So right now we're still using HELOCs I love HELOCs. Like if you have equity in your house and you're sitting on it, just might as well get a HELOC on it. It's just so flexible in so many ways, right? So either renovating your own property, buying a property, renovating that property, and then pay down and recycle those funds again. So as of right now, we're still doing HELOCs, equity line visas. So I think it's just an amazing vehicle, and so far right now, nothing's changed.
Okay, that's good to know.
And it's great interest rates, right? Typically around worst case prime plus 1, best case prime plus a quarter, prime plus half. Right. And you're under 3% for just revolving credit. Oh, fantastic.
I mean, it's the bread and butter for people doing multi-unit conversions.
Oh, it's amazing.
It makes so much sense from a tax perspective as well, right? And I'm sure Cherry's going to point that out to us. One more question here, and I have a couple people that were asking that is sort of the loan to value. So those numbers were great, for like you said, perfect storm, best case scenario. A lot of numbers that we're looking at realistically is getting a property for maybe under 5. In sort of the markets like Hamilton and Kitchener, for example, doing $100,000 in renovation. So something like that, they're going to put $100,000 in down payment for the property, let's say 20%, and then $100,000 for the rental, right? So they've put in $200,000 as an investment. If they do a great bang up job, a Manny type rental, what can they expect out of that? Is it just going to be their rental money, assuming they put $100,000 and they increase it by $100,000? Like, do you think they can get more than just their rental money, or is that going to depend?
Yeah. So if you're buying for $500,000, $100,000 down payment, $100,000 renovation cost, and with it, are you seeing that people are just increasing the value of the property dollar for dollar, Andy? Like, Like for me, it's usually a little bit higher, right? So, but
it definitely depends.
Exactly.
On the rental. Yeah.
But like if you go for dollar for dollar and you've increased your properties to 600,000, if you go, we're seeing 80% loan to value still. So you're looking at 480, right? So you're able to pull out $80,000, right? So in that case, it's still good, especially if you're able to create a second suite or a second unit or a third unit even. Where you're cash flowing now positively, right? So I think that's very key. But we're still doing refinances up to 80% all day.
Okay.
So absolutely.
Yeah, no, that's great to know, and that makes a lot of sense. And from a 2-unit perspective, a lot of appraisers don't really look at that, and that's why I always encourage people to still focus on the things that are going to bring you the value, right? The great kitchen, the great bathroom. Make sure your roof, your electrical, that stuff is updated, good curb appeal. We always encourage try to get more than what the value is after you spend it, so that you can try to take more out.
For sure.
Yeah. Okay. Thanks, Kevin. So you're going to be able to stick around as well?
Yeah, absolutely. Ready?
Awesome. Okay. So we're running a little bit behind. So next we're going to bring on Manny, who's been a great colleague, partner, and friend for many, many second suite conversions. I've lost count. He's going to tell us about how he's managing rentals at this time with the lockdown, and also what he's personally doing with his portfolio. Okay, Manny, it's yours. Can you unmute yourself, or need me to do it? There. Where are you? Manny.
Can you hear me now?
Oh, yes. Awesome.
There you go. Thanks for being on here tonight, everyone. And thanks for having me, Andy. Always a pleasure. So what's going on right now in the construction industry for us specifically? We're not doing any work right now. Anything that we started prior to April 4th, we could continue, and we finished all of that. Anything after April 4th, we cannot. I know that last week some of the stuff was lifted in the construction industry. Unfortunately, it doesn't pertain to us. I did speak to one of my Hamilton inspector friends actually yesterday morning, and he's saying, depending on your inspector, he says, "Am I going to give you a fine if I come out and see it?" No. But when we're not going to take that chance, right? It's just not worth it. But they've got a meeting on the 19th, which I guess is next Tuesday, and they've been told that possibly that residential work is going to be lifted, and we'll be able to start with restrictions, of course. But I mean, that's good news. It's not 100%. I know that our provincial government's going to announce some more stuff tomorrow. I know they're talking about, I think, marinas and golf courses right now. So we'll see what else they're going to end up doing. But I mean, if you're a homeowner and you've got the permit, and even if it was after April 4th, you could actually technically work on the property. And that's coming from the Hamilton inspector to say, if you're the homeowner, you can do it. If you're sending it out to an outside contractor, you cannot. So that's where we are right now. So anything that started after April 4th, we're not working on, and we got a ton of projects to start out in Hamilton. We got projects in Hamilton, Caledonia, all kinds of stuff coming up, but unfortunately, we can't start them. So that's what's happening on the construction side of things for us right now. So is there another slide after this one here?
Yep, you got 4 or 5 slides.
Okay, so we talked about when I expect it to be lifted. I mean, I don't have a 100% answer on that. I'm thinking it's going to be very soon. I'm crossing my fingers that it's going to be in the next week. And talking to the inspectors out in Hamilton, they sort of get that feeling that it's going to happen next week. So he's actually going to call me on Tuesday after his meeting with the City of Hamilton, just to let me know what transpires out of that. I mean, right now, we're just putting a lot of things together and getting organized, because we know this is, no matter what's going to happen, we're not going back to the norm that we had before. It's going to be a new norm, whether we like it or not. That's just the way it's going to be. So we're preparing all kinds of paperwork. I got to be very careful as well. I've actually had one of my lawyers check one of my COVID-19 declarations that I got to get every employee and every subcontractor to sign, or they will not work in my projects. We will be posting signs on the doors inside, telling people what the rules are, what the regulations are, who to contact in case they do get sick, so on and so forth. So we're going to have cleaning stations and provide all that stuff. Social distancing, only 3 workers in a house at any given time, and they're going to have to wear masks. So we're just preparing all that stuff on our end, just to make sure that that we're all protected and everybody is safe and everybody knows what's going on. So, like I mentioned, it's a different norm now, and we're just going to have to get used to it. And there's not much we can do with it, so we got to go with the flow and make the best of it. But that's what I'm doing right now to get prepared, so that when we're starting, I'm actually looking at scheduling right now, anticipating that we might be able to start within the next week or so. So I've been talking to some of the sub-trades and letting them know what's going on and trying to get them lined up just in case they do lift that. We're ready to go full force. So
Manny, you sent me the News Ontario link last week. And
yes.
indicated that they called it multi-unit, and
yes.
to me,
yes.
Technically 2 units, duplexes, or
multi-unit
is technically multi-unit, but I don't know if they're just being kind of vague with their wording right now.
Well, here's the funny thing. There's a hotline that you can call to get clarification. So Matt and I both called in a couple-day period and got different people to find out, like, can you give us some clarification on this new lifting for some of the construction? And they could not. They had no clue, no idea. They said, we don't have enough clarification yet to let you know whether you can work on the projects that I was discussing with them. And they were telling me we have to wait probably another week to try to get some clarification, because they didn't have the clarification. So
okay.
they couldn't give me an answer. So that's what transpired out of that. So in the meantime, we're using this time to, I'm doing a lot of things that I normally wouldn't have done. And so got to use the time wisely. And it's been good for that. I've probably accomplished a lot of stuff that I normally wouldn't be accomplishing. So it's helped me out that way. But I mean, we all want to get back to somewhat of a normal workplace again and get going. I mean, I know I've got my clients calling me, but when we're starting, and I just don't have an answer. I can only guess at this point and be ready to go. So on the construction side, that's what's happening with us right now.
Okay, next slide on hardware stores, materials.
Hardware stores, materials are a real pain in a butt. You got to be really organized. If you're going to order materials, make sure you got a checklist and you order everything at once. I just ordered a couple of small items for one of my properties in Hamilton. And today is what, Wednesday? I ordered it Sunday morning. They said it was in stock, and I still do not have an email to pick it up. Now the stores are open to the public now. You can go in. A lot of the busier stores, you are lining up. They're only letting so many people in at a time. I mean, the lineups look intimidating, but once you get in the store, you actually move through pretty quickly. So it's not that bad. And depending on the time of day, the earlier you go, the better. Obviously, if you go midday, it's pretty busy. So I'm glad to see some, that happening at least. And when that's happening, the rest of the residential projects have got to be followed suit, right? So, I mean, that's what you would think. But it's been a bit of a pain for me. We were working on some flips that we were finishing up in Barrie that were all done, and we had to deal with a lot of online ordering. So it was very challenging. I know some people had good experiences. I didn't have any good experience with any of the Home Hardwares or the Lowe's or the Ronas up here in Barrie where I ordered from. It was difficult in every single store, and it took 2, 3, 4 days. And in some instances, it took 5 days. So hopefully that's going to be a little bit easier now, but be well organized and be prepared if you're ordering something online. Don't forget something. But the good thing is you can get in that lineup and get what you need now at the big box store. So that's a good thing. So I'm glad to see that they're back open.
Did you try any online ordering? And if you did,
yes. No, that's what I'm talking about. All my online ordering was not successful. It took days to get.
Okay, sorry. I meant like not through like Home Depot, but just like another, like Amazon or other options.
No, oh, you know what? Actually, I've ordered stuff on Amazon, not construction related, but for the office and stuff. And Amazon was crazy fast. I remember ordering stuff like in the afternoon, and it'd say, you guaranteed 3-day prime, and the next morning it's at my door. I'm like, what the hell? It's crazy. So I had good luck with Amazon ordering stuff that I have been buying from there. But as far as ordering online with the big box stores, no. I got to say the only hardware store, lumber store that was pretty good was actually Home Hardware out of Barrie. I did do a couple of orders out of there, and I had an email within 24 hours to go pick it up. But the rest of them, it's days.
Right. Okay.
That's my experience up here anyway.
Yeah. Okay. Well, I guess that's why probably Jeff Bezos is going to be the first trillionaire.
Well, yeah, this is all great for him, right? I mean, look at what his net worth is going up in stock options and everything else, because all the little guys are done and out, and he's taken over, right? And I don't know, it's almost like a power play, right? It's really going to be great for these big guys, but a lot of small businesses, let's face it, they ain't coming back. They're done.
Yeah.
So
all right, Manny. So let's talk about what you're doing. So you mentioned you have a little bit of time to get things prepared. I know that you've been working on some signs and stuff like that.
Oh, there I am. I look like mini
Very handsome guys there.
Oh, that's for sure. Well, my house flipping business is very busy. It's going very strong. I do a lot of off marketing, and I've been focusing lately in Simcoe. So all my marketing's been up here right now. It's working quite well. I mean, I looked at 3 different properties today, from Midland to Aurelia and back into Barrie. But that's going good. And prices are crazy. So for instance, I just sold a house in North Barrie. It was one of my flips, listed it, and we sold it the same day, full asking. It's now closed firm. I actually closed on another property in Bradford last week, Tuesday. So a week ago yesterday. And, we did some research. The plan was to go in there and spend $70K and do a mild reno and put it back and flip it. No, that's the one I sold in North Barrie. And we sold that like within, I don't know, it was like 13 or 12 hours or something. It was sold. Mm-hmm. So it's the one I just closed last week on Tuesday in Bradford. I'm sure I posted on there somewhere. But the plan was to go and renovate that. But, sat down my realtor, and we did some research in Bradford, and we looked at properties anywhere from, $475,000 to $700,000 in the single family category. And there were only 13 properties in Bradford that fit that bill. And we sat down and says, you know what, this is crazy. let's try what we did. I did this in another Northbury property, which was insane. I can talk about that later on. But I closed on that property last Tuesday, and we put it on MLS on Friday, I believe. We had 15 showings, and we reviewed offers on Sunday, and I sold it for over asking, and I didn't lift the paintbrush. So we literally just closed on it, put it on MLS, and sold it.
Amazing.
Right? And we sold it for $155,000 over what I paid for it, like within a week's time.
Amazing.
Yeah.
Yeah. So, well, I mean, I can't keep track. It seems like every couple of days you have a success story posted on your social media.
The market is strong right now. I mean, volume is obviously down. I mean, we know that. Right. But if you got a great property, it's still selling because there's nothing out there to look at. Mm-hmm. And especially if it's a renovated property that's just, turnkey. And the other key is as well is there's nobody in it. You're flipping it, so it's vacant. It's so much easier to see. You get a ton of showings.
Right.
But right now it's finding the properties. Selling them has been very easy, and in the last probably 2 months has been my most profitable month flipping houses. Believe it or not, it's been pretty crazy.
Right. All right. Well, congratulations, yeah. And I'd like to echo Lisa's comments there. Wow, even during a pandemic.
Yeah, that's right. Actually, I spoke to Lisa. I had a conference call with her earlier today.
Okay, so so Manny does a lot of work, obviously, with Second Suites, and he also does his own projects with joint ventures. If anybody's interested in working with Manny, I'll put that previous slide up.
So there you go.
Your website, simcoehousebuyers.ca.
That's the house buying business, yeah.
That's if you want to sell your house. Okay, sell your house, but if you want to connect with Manny.
You can connect with me at primoreno.ca. Yeah, that's a good way to connect with me. And like I say, we do a lot of house buying and flipping. We do a lot of second suite conversions, and we also work with joint venture partners on long-term buy and holds, as well as we do a lot of we have a lot of partners who just loan us money, mm-hmm. and they're making a ton of money and they're all happy. So we got a bunch of different structures that we have throughout the business.
All right, so let's get to a couple questions here. This one might be a little bit loaded, but I'll give it to you anyways. Is the cost to reno a duplex $100,000, or does it depend on the square footage? 100,000 is a number we throw around a lot. So
yeah, that's an average number. I mean, it depends on how you renovate it. What type of finishes are you doing? Are you including anything on the main floor? But that would probably be the average, including the HST. Because as you know, you're gonna have to pay the HST. You're not going to get that back as an investor. So including HST, you're probably, if you're starting from scratch, you're probably looking at $100,000. And sometimes if it's a little bit finished, you're almost better off just to gut it and start it from scratch anyway. Mm-hmm. But that's an average. I mean, we've done properties where it's been $50,000 to renovate. So it's not always $100,000. It depends on what you're buying, what you're dealing with. So it's all over the place. 100,000 would be, 100,000 would be.
Sorry, go ahead.
Yeah, 100,000 to be something that you're starting from scratch, right back down to the foundation walls, and you're doing a pretty nicely finished suite to maximize your rental income, because you want to do that for sure. But we've done projects that it's been 50 grand. We did a project that was only I think it was actually for Erwin's brother, Tony. I think that one was only like 35 for 40 grand. So it depends on what it is that you're buying, what the property is.
Yeah, and a lot of times, it was a rec room or it was an illegal non-conforming unit, but it was done in pretty good. It's in pretty good shape, and it was done well. And it's a matter of sort of legalizing with the smoke alarms, with the egress windows, mm-hmm. Fire doors, things like that, right?
Yeah.
We have a question here. So the cost to renovate per like maybe just a rough per square foot. So let's say you're talking about a bungalow, 1,000 square feet, 900 square feet. What's the cost per square foot using like good quality finishes? Usually finishes are like there's like 3 grades, all right? Or 2 grades?
Yeah. You want to use $100 a square foot. That gives you a good guideline.
Right.
And that's for doing something that's complete from start to finish, right? Something new.
Yeah. Okay. Paulo asks, are you on Instagram?
Yes, I am. I don't post as much to Instagram. I don't know why. I'm big on Facebook, but yes, I am on Instagram.
You got to get on TikTok. Come on.
Yeah. So many platforms. I gotta hire someone to.
I want to see you do the Tootsie Roll.
Yeah.
Tootsie. Okay, well, thank you, Manny. I appreciate it. That's really good.
You're very welcome. Thanks for having me.
Just to back up here a little bit, I can't believe we didn't ask the Holy Grail question to Kevin, which was interest rates. So now that we have not done that, I'm going to hold off until after Cherry before we ask Kevin that, just so that you all stick around, because that's going to be a cliffhanger. Right, Kevin? Okay. Thank you, Manny.
You're welcome.
So we're going to wrap things up with the cherry on top, literally. I know, that was bad. Sorry, Cherry. We have Cherry Chan. Cherry and her team helps countless investors and business owners maximize their investments while minimizing as much taxes as possible legally. She's going to give us some info on tax impacts of second suite projects, in addition to some tools now available for investors. Cherry has been amazing in providing really good, up-to-date information on her website, Real Estate Tax Tips. Is it .ca or .com? .ca. I've been checking it out for the past month or two just to kind of get a good snapshot of what's available. So Cherry's always on top of what's out there. I as a matter of fact, one time I told her I was interested in buying an electric car. The next day there was a blog on the all the tax implications about an electric car. So that was amazing. So thank you for that, Cherry. And I did get the electric car.
Can you hear me?
Yes, I can hear you.
Okay, awesome. Because I'm using my phone, so I'm trying to I check in both ways, and I hope to not lose my connection. Okay, thank you for the introduction, Andy. Really honored to be here, sharing the stage with so many experts here. A little bit about me. Should I get my slides up? Do you have my slides?
Here, let me do it. Yeah, just let me know next slide, and I'll
okay. So a little bit about me. I am a real estate accountant. I am trying to be a stock hacker, a mom of 2 beautiful children, a mom to my 3rd child. His name is Erwin Sito. I have a book. I do a lot of public speaking, and I have a website, realestatetextips.ca. If you are not on that yet, you can join by going to the website, and you'll find a ton of information there, a lot of tax tips on real estate investing. Yeah, so that's pretty much me over there. And next slide, please. A little bit of a disclaimer here. So my disclaimer is that I'm providing some information to you for general purpose use only. You may want to, before you take it and apply it to your own personal tax return, better consult with an accountant that knows what they are doing. So let's just go into the first slide, next slide. Can I deduct the money spent on conversion? So I've got many clients that came to me and said, hey, I spent a ton of money on renovating a property that I just purchased. And so can I deduct that? I'm expecting some money back from the government to help with the renovation. And the reality is you may or may not be able to deduct the expense that the $100,000 or $30,000 that you spend on converting a house into legal 2 units, or even adding a suite. Now, the bottom of this whole issue is really, it depends. If you're converting an existing rental, so you own the house. I have a few clients, they already own the bungalow. They bought even before legal secondary suites were allowed in Hamilton, and they bought it, and they're renting it out for $1,600. Hamilton Mountain House, still renting it out for $1,600. I know it is not common. It's crazy, $1,600 for the entire house. But they've been there for a long time. And my client is contemplating kicking the tenants out to convert it to legal 2 units. And if you have a situation like that, and the basement kitchen and setup is already there. You're just doing minimum requirement to meet the standard. There is a chance that the conversion expense would be deductible as a one-time expense. And it goes back to your tolerance of being audited and all these other criteria. But essentially, you would be able to deduct some portion of your expense if you always own the property and you're considering converting to 2 units. Or so that's one criteria. The second scenario is that if you're converting an old home that you just purchased. So many of us are on this boat that we just buy a house on the mountain in Hamilton or anywhere. You are converting it into an old home that has a basement height to add the secondary suite in. The renovation expense incurred consider capitalized expense. So it doesn't mean that you cannot deduct it. It's just being added to the cost of your building. So let's say you purchase a property for $500,000 and you spend $100,000 on renovation. Instead of writing off that $100,000 expense on renovation, you would add that $100,000 to the cost of your purchase. Now the cost of your building is $600,000. And when you eventually sell it for $700,000, $800,000, or even $1 million, the delta between your sale price and your purchase cost and your renovation cost would be taxable. So you get the deduction way later down the road, and there is no immediate tax benefit. Next slide, please. So so here is some guideline, general guideline to guide you through whether you would be able to deduct the expense. And you can see that if you follow the criteria, the 4 criteria, you would see that secondary suite are generally not deductible, except in the case if you are converting it, if you are converting an existing rental property to legal secondary suite and you had tenants before, there would be some expenses that you would be able to deduct it. Next slide, please. Now, the reason why we have to look at all these, whether you're allowed to deduct it or not, is because as I explained earlier, if you spend $100,000 on conversion in year 1, that $100,000, you can only claim something called 4%, something called capital cost allowance on an annual basis to reduce your rental income. And that is only, like, for example, in our example is first year, you can only claim something called $2,000. Year 2, maximum you can claim $3,920. But year 1, you already spend the $100,000. So you can see that your benefit is not getting there until when you really sell the property. But if you call something that writing it off or calling it a repairs, that $100,000 technically would be then you would be able to write it off immediately the first year, and you can get the tax saving as much as $50,000. Of course, this is not a one-size-fits-all thing, and I don't think you would want to claim $100,000 rental unless your property is gigantic. Because claiming $100,000 rental loss will guarantee you an audit, and you don't want to go through an audit. Next slide, please. Now, the bottom line is that you always want to argue that it is a repair expense. So the criteria that I just showed you doesn't just apply to legal secondary suite. It also applies to replacing a roof, replacing a kitchen, replacing a bathroom. So those criteria still apply to everything that's repair related. You always want to argue that it is a repair expense within the rules because it provides maximum tax benefit. Next slide, please. What if I add an addition? If you add an addition, because I think Andy mentioned about adding another addition, like not secondary suite, adding an addition, allowing a third family living in the same piece of land. If you add an addition to your existing house, it did not exist before, and therefore definitely you cannot deduct it in your traditional sense that you can write it off as an expense. It has to be it would have to be considered a capital expenditure, which means that, again, it goes back to adding to the cost of your building. And eventually, when you sell it, you would then be able to claim the expense against the future profit that you make. And that is the adding and addition. Now, next slide, please. HST implication, because someone was asking about HST implication. Now, if you are doing HST on addition, it is considered a builder in the eyes of CLA. You are considered a builder in the eyes of CLA. You're building for yourself. Even if you hire many to do the build for you, it is still considered, you're still considered a builder. The HST that you pay to many would be deductible, but then you also need to pay CLA HST. The HST that's calculated that you need to pay to CLA is basically based on the fair market value of your addition. So how do you know? I don't know how much the fair market value of the addition is. You may need to get an appraiser for before and after value, and then you do you estimate the fair market value of your addition. Now, the difference, now that you have a fair market value of your addition, you take that fair market value of the addition, add that HST is 13%. So if you take that 13%, subtract what you pay to many on creating the addition, that delta would be then remitted to CLA. So yes, you are losing some money to building the addition. You're losing some HST on building the addition. And for people who are paying HST, who are doing HST, who are doing legal secondary conversion. Legal secondary conversion is...
Sorry about that. I just muted. Somebody unmuted. Oh, I muted you too. Yeah, sorry about that. Go ahead.
Yeah, no, don't worry. So if you are doing legal secondary conversion, if you tell CLA that you would have to, if you tell CLA that you're doing the conversion, they may deem you as the builder as well, just same as adding an addition. And if they do deem you as a builder, you are creating a new unit, you can claim the HST that you pay to the contractor to build you that unit. But then that means you also need to pay HST to CLA. Yes, you're getting the rebate back, but rebate is only a portion of what you get. So typically, you're still losing the HST. So for legal secondary suite, we typically do not claim the HST impact. And then that's next page. That's the end of my presentation. I know Andy may have some questions about COVID-19 tax relief. I had a lot of that information on my website already. I'm getting even bored to talk about all the COVID-19 relief because I've talked about it so much.
Yeah, no, that's great, Cherry. No, I appreciate it. I think this is actually the way you've outlined this type of information is more helpful for people. And again, all the really helpful things that are available are on Cherry's website and blog, Real Estate Tax Tips. I'm on it. All my friends are on that site. It's amazing information. So go to that and sign up. Cherry has a great team of tax accountants that very specialize in real estate. So I encourage you to check her out if that's something that you need services on. So
yeah. So I don't know if there's any question.
Yeah, there are a couple. I'm going to go through a few of these, and
sounds good.
I'm going to ask this first one, which also is very loaded, but I'm going to ask it anyways. Is it better to have the property, let's just say a duplex property, in a corporation or personally?
Well, so loaded. There is a free report on my website. If you go to realestatetextips.ca, and there is a report called 7 Questions. You can just go there and download it.
Good. Okay. Can you get the HST back on a rental? You already explained that, right?
Yes, yes.
GST on a new addition, I guess the same thing.
Yep.
This is a question everybody has been asking, recording or replay to come. Yeah, so as long as Zoom has been recording what we've been doing, there will be a replay. Fingers crossed for that. Guessing HST applies to adding coach houses as well. I certainly hope so. I mean, I would imagine that's similar to a new construction.
Yeah.
legal fees to the lawyer on closing capitalized or expensed?
Capitalized. That one is easy.
Sorry, can you explain that to me quickly in like 2 sentences?
Capitalized is being added to the cost of the building. You cannot write it off as an expense.
Oh, right. Okay, yeah.
Yeah.
Oh, can you confirm the interest on the loan to create the second suite is tax deductible? Is that something you feel comfortable saying it is?
Yeah, it is tax deductible, assuming that legal secondary suite is your rental property.
Right.
So if you are you're creating a legal secondary suite just for your parents to move in, then that is not deductible. So interest is always deductible if you are using the fund for the purpose of investment.
And it would be the same if you were flipping that property and selling it, right?
Oh yeah, absolutely.
So is this basically kind of the sort of the Smith maneuver of being able to sort of deduct your mortgage interest by doing it in the HELOC and writing off the tax? Is that kind of what is similar?
Yes, and the Smith maneuver has more than that, right? Like, so for example, I guess there is a second part to Smith maneuver. There is a cash stemming part as well. Like, for example, if you are having, the reason why we're all buying legal secondary suite is because it's providing sufficient cash flow to cover all the expenses of the property, and you still have like a few $100s of cash flow. That few $100, you have to pay tax on it. So you will take that few $100 instead of paying down your rental property's mortgage. You will take that few $100s of cash flow and use it to pay off your primary residence mortgage. And because you would already got the HELOC set up, advanceable HELOC set up with Kevin, so then you would then be able to free up the extra money that you put into your primary residence mortgage in the form of line of credit, and you can continue to reborrow it. And that's pretty much the Smith maneuver, and deduct the interest accordingly.
Wonderful. Okay, thanks so much. That was really good information. I'm amazed at how much good information you got there in such a short period of time, Cherry. So thank you so much for that.
No problem.
Okay, I think we're doing good for time. What maneuver? Yeah, just Google Smith, like the name John Smith maneuver, and you can find information about that. Okay, so I'm going to get into third units. Okay, so new policy coming up in the coming months and years that are going to be very lucrative. I'm going to get into that. So you don't want to miss that. But before, I'm going to go back to Kevin. Kevin, what's your outlook for interest rates? We know that obviously the overnight rate is 0.25. It seems like prime has not really changed, and then even the variable as per prime has not changed much. I think it went a little bit lower. Can you clarify any of that, Kevin, and what your thoughts are in the coming months with regards to interest rates in response to the Bank of Canada?
Yeah. So no, that's a question that's on everyone's mind. The Bank of Canada reduced their overnight lending rate 3 times in a matter of 3 weeks. Therefore, prime rate follows suit. Prime's at 2.45% right now. So if you've registered a variable rate mortgage prior to with a discount, then you're just in a great position. That's why HELOCs are such powerful tools to have right now, because they're at, say, prime plus 50, so you're at 2.95%. The market outlook, I've talked to a lot of different personnel higher up at our lending institutions, and like the consensus is that prime rate is going to stay stable for the next 12 months, just to create a little bit of stability in the market. You know what I mean? Over the past 6 to 8 weeks, there's a lot of instability in the market. So therefore, there was fixed rates went down, then fixed rates went back up again, and then this week we've seen fixed rates went back down again in correlation with bond yields. So, but variable rates, it's still very attractive, and we believe the prime rate is going to stay pretty consistent over the next 12 months.
Okay, that's great to know. 12 months is a good time frame for us to kind of figure things out. So thanks for that,
Sure.
Kevin. Okay, so I'm going to spend about 10 minutes here talking about third unit garden suite. So who's interested in blowing their cash flow wide open with a third unit garden suite? Raise your hands. I can't see all of you. Okay, so if you are, I have some exciting news for you. Okay, so some of you probably already know about this. So in 2019, we had Bill 108, the More Homes, More Choice Act received royal assent. And so here's an excerpt from Schedule 12, the Planning Act, under additional residential unit policies. Okay, so it says the subsection is reenacted to require policies authorizing additional residential units by authorizing 2 residential units. So this would be, you know, the main unit and the second suite, which is what we've been doing for the past 7-8 years. In a house, and by authorizing a residential unit in a building or structure ancillary to the house. Okay, so that's what we've been referring to as a garden suite, coach house, detached accessory dwelling unit, whatever you want to call it. It's basically a house in your backyard. Okay, fully functional. Okay, and this is something that we know with markets that have allowed this. Most of them in the West Coast, Canada, and in the West Coast of the United States, all of California, they do work. They are a great housing product for the market that can be rented, that can be used for a family member. A good percentage of them are actually rented at below market rate for friends and family members of the homeowners. Okay, so it's a very good product. It's the least. A detached accessory unit, similar to a second suite, it's the least disruptive type of housing for a residential neighborhood. So when you get people that are objecting against development, this would be the least disruptive and would be very beneficial in a lot of our low-rise, single-family residential zones where, you know, there's actually population decline. And so having these additional units would be very good for the neighborhoods, bring back density, help local businesses, help repopulate the schools and community centers. Very, very good, just like second suite. So we're just going one more incremental. Now, the one key question is whether there will be any significant development charges associated with this. I don't think there will be, as the goal is for cities to intensify and provide more housing and do it in a way that is accessible for existing homeowners and small investors. Okay, so similar to Bill 140 that got passed in 2012 to mandate second suites to be allowed in all municipalities. This will be for third suites and will likely take several years to fully roll out in various cities in Ontario. Okay, so don't expect this to happen overnight. You know, we've been speaking to a few cities and planners, and we're getting you know, a little bit of inside scoop on what's happening. Not a lot of people are talking about this right now, and you know, it's not really in the media much. And property values have not taken this into consideration, notwithstanding, of course, the unknowns with COVID. Okay, that aside. You know, the property values are, you know, you're still valuing it based on a single family home and potentially you're doing a second unit. Okay, so it might be an opportunity for you to take advantage of this right now or in the coming months or even years. You know, this is a big deal because it's almost like you're building on free land that you already own. Okay, so, you know, obviously it's not free. You know, you purchased the property or you bought it, but you bought it based on it being a single family home, or you already have a single family lot that you can do this. Okay, so in any development project, the land value can range anywhere between 25 to 50% of the total cost of construction, depending on the market. Okay, so because I do infill development, I'm aware of the complexity in terms of severances, costs associated with urban planners, development fees, you know, parkland dedication fees, school levies, and it really just adds up, and it makes development very difficult for, you know, the small mom and pop investor or the homeowner. Something like this allows somebody at that level, or even, you know, if you're a sophisticated investor, it's still very profitable, and it's something that you can get into. And this is something that it's great because you're building, for the most part, it's going to be by right. Okay, which means that it's within the zoning bylaw. That's a big difference compared to having to go through the legal hurdles of, you know, a minor variance, a consent application, and in some cases, even a zoning amendment, right? That eats away at the profit. Okay, so if you can save that, you know, by building on a single family property you already own, that value is incredible. So I'm going to run a super quick pro forma on this. Okay, so these are very, very rough numbers designed to just give you an idea on the returns. Okay, I have not spent a lot of time on this. So in option one, we have a standard second suite investment. We're going to estimate the purchase price of $450,000. Okay, so plus or minus 50,000 would probably be the right ballpark, with a second suite rental of 100,000. Okay, so total investment required would be 90,000 down payment plus 100,000 for the renovation for 190, 200,000 roughly. Okay, obviously I haven't included closing costs and legal land transfer taxes, etc. But again, just a rough idea. A reasonable rental income for both units would probably be around $3,000. Okay, so maybe if it's $400,000 property, maybe it's around 28. If it's a 500,000 property, maybe it's 32. Even we've had as high as 3,600. Monthly expenses, including mortgage, taxes, maintenance, vacancy, cost of borrowing from a HELOC, a home equity line of credit. Roughly, you're looking at around 2,600. Okay, so that gives us a cash flow of around $400. So this is not bad. This is what we've been doing, and this is something that if you own several properties, this is good, right? You're getting cash flow, you're getting mortgage paid on the property. Hopefully, you bought in a place where it's good fundamentals, so it's going to be appreciating, and then you're forcing value with this extra income suite. Okay, so now let's look at option two. Okay, so we have a second suite. We always do the second suite, no matter what. Okay, that's the low-hanging fruit. That's the first thing to get done. And now we're adding a third unit garden suite. So again, purchase around $450,000 with a second suite rental at around $100,000. We're now going to build a third unit garden suite for roughly $150,000. Total investment required $340,000, covering down payment, second suite rental, garden suite construction. Total rental income estimated at $4,600. Okay, monthly expenses, as we mentioned, all those things around $3,400. Sorry if I'm going faster. Giving us a total cash flow of $1,200 roughly. Okay, so again, very rough numbers, but if you can see, just ballpark, the additional 75% increase in initial investment, we are able to gain roughly 3 times the cash flow. So where is this magic money coming from? Okay, so this is what we mentioned earlier, which is essentially you're building on free land, and this is stuff that is happening slowly across municipalities as they realize that they need to intensify. They need to bring in extra revenue. A lot of cities are looking at changing their zoning bylaws to make it, by right to have 3 units. Now, keep in mind, this is different from a lot of the existing three housing unit neighborhoods like R2, R3 zones where you have triplexes. This is different, okay? Second suites and duplexes are different. These things and triplexes are different, okay? This is designed, these units are designed to be subordinate to the main unit, okay? Of course, we'll have to wait and see if cities will be levying any additional development charges to fully understand the costs. But so far, it looks pretty promising. You guys follow me so far? Oh, there's a ton of questions. I'm going to get to them. I have spoken to a number of city planners from various cities to get a better understanding. I'm actually going to be hiring a small little team to help me investigate all major markets in Ontario to see where likely it's going to be happening. So here are some of the rules, preliminary, that we have to consider if you are going to do this. Okay, so a lot of it is not clear cut yet, but if it's something that you're interested in getting into the market right now, so beware of these things. Number 1, minimum lot size requirements. Okay, that's going to be very important. Generally speaking, it's probably going to have to be a minimum of 4,000 square feet, maybe even 5,000 square feet in some cases, right? So 40 by 100, 50 by 100. That would be reasonable for you to build an extra house, make it comfortable, create that privacy, that autonomy for the occupants. There's going to be a maximum unit for the actual the house. Sorry, not unit. Maybe 10%, maybe 15%. So let's say your lot was 4,000 square feet. You have a house there, and maybe the house is 1,000 square feet. Your garden suite can only be 10%. So that's like 400 square feet. So it's not going to be a huge place. Now, if you get a larger piece of land, let's say you have a 8,000 square feet parcel of land, then you're going to be able to build bigger. Okay, so that's probably going to be in the 10 to 15% range. So that's another thing to consider. Number of parking spaces required, that's going to be important. Most likely, there you will need to have 1 parking space per unit, so 3 in total, most likely. A lot of the push from the ministry is going to be to allow them in a tandem arrangement, okay? So that you can make parking a little bit easier. Maximum height of the 3rd suite, that's a lot of times I think it's going to be, they're going to try to limit it to 1 story. Now, even if it limits to 1 story, that, you know, that doesn't necessarily mean that you can't do a basement, okay? So you might be able to do a small bungalow. And then connection of utilities is very important. They're not going to want you to have a septic system or a well system. It's most likely going to have to connect to the city services. So it's going to depend whether it's connecting directly to the city, which is going to be very expensive, or if you can connect off of the main house. Now, if you're buying a property and you're putting in a 2nd suite, have that provision. Have that provision in place that you're going to be able to connect the utilities, right? Probably at least a 3/4 1-inch service line coming in, proper size drains, maybe a 200 amp service coming in, and then you can connect 100 amps or 60 amps to the accessory unit. You might want to do some sort of off-grid stuff on this. You might be able to do solar panels or certain energy efficient things that you can use for this unit. So there's very creative ways to do these. So yeah, that's at a high level. I'm doing a lot more research. I'm actually getting a lot of information right now from various planners, and I'm going to include this stuff in my training course. So how are we doing for time here? Okay, so I'll be another 2 minutes, and then we'll have Q&A with all the panelists back on. So a lot of you know about my masterclass, so that's going on. We're on the 2nd round now. Great feedback, a lot of new information that's being added on. So we are talking a lot about, obviously 2nd suites, that's low-hanging fruit. But, everything that you're doing, everything that we are involved with, whether it's 2nd suites, 3 units, coach houses, laneway houses, infill development, it really starts by converting that existing home to have a legal 2nd suite first, okay? That's, again, the very first foundation for everything else that we do. And so, the students that have taken our training, they feel that they have more knowledge on 2nd suites and investing than probably 95% of the investors that are doing this, okay? So it's a very good value. Our goal is really to make this course for you to get 10 times at least the value out of this course from what you pay for it, okay, on single property. And then obviously you're going to be doing multiple properties. If you're interested in these types of opportunities, I encourage you to enroll in this program. So our next start date is going to be June the 17th. If you do take that, sign up for the training now, you can get access to all the content, join us right now, and then you can start fresh again on June, okay, in June 17th. So a little bonus that I'm going to be doing as a bonus module will be the 3rd unit garden suites. So this is all of the research I'm doing right now. I'm also talking to builders to figure out ways where we can bring the cost of these down. And I think one of the issues with prefab building of these garden suites is that there hasn't been enough demand. But if there's going to be a sweeping regional mandate, such as a provincial mandate, this is going to really bring the demand of these units and allow manufacturers to have economies of scale. Okay, so we're seeing a lot of companies that are looking into this, building more factories, reducing transportation costs for these. I think this is going to be the next big thing for the next 10 years. Okay, so I want to prepare you guys for it. I'm going to be doing them 100%. I'm looking to try to see if I can get involved with one this year, if possible. Okay, so if you guys are interested, on my training, this is going to be a bonus module. The training is $997. We still have the spring promo up, which is $400 off. So yeah, feel free to check it out and ask me any questions if you guys have anything. One more slide. If anyone is interested in working together on either these garden suites or laneway house. So the laneway house opportunity is actually quite interesting in Toronto. We're looking to convert a single family home to a 3 unit and then also add a laneway house, which is going to be 4 units in total. Okay, so it's the same idea as the garden suites, but it's just on a laneway. It's going to be a smaller property overall because it's in the city of Toronto, high density areas. anybody who's interested, sign up on my site, suiteadditions.com/projects, and then we'll sort of keep you updated on opportunities. Okay, so that's it for me. All right, thank you very much, everyone. I hope that was very informative. I learned a lot today. And yeah, so feel free to ask questions. I'm going to just scroll back here. I think there's 24 new questions.